welcome to the Rock Trading Communities video, and this is your selling climax in volume spread analysis video. And in this video I'll be teaching you what is selling climax, and at the same time let's understand how to trade selling climax. And this video is going to be special for me because this one particular pattern has helped me a lot to gain more returns in terms of swing trading at the beginning stage of my VSA journey, like literally 2-3 years ago. When I started just learning VSA, when I started learning through books or let's say courses, I joined different courses. So after learning this, initially I didn't understand how to trade effectively with this one particular pattern, but later on I understood how simple volume spread analysis is, and based on that I combined it with different types of technical analysis. Right now I might be using elite waves and volume spread analysis together, but selling climax itself is a very beautiful concept and you can literally use it in a very simpler manner. That's something I'm going to show you in the form of both theoretical and practical in this video. So first, let's understand what is selling climax. Selling climax is a very powerful sign of strength. Selling climax is a wide spread bar projected on a high volume. Selling climax may have a downward rejection wick. A stock should be in a downtrend for at least several days or weeks, then downtrend end as soon as possible. So right now, I'm gonna, instead of going for a theoretical pattern, let me just teach you in the form of a practical itself. I think that would be more effective compared to the theoretical pattern, right? So let's get going. So right now I have an example right here, that is HDFC Bank, and it's a 30 minutes time frame in our trading view terminal. And as you can see, there is a selling climax right here, right? Now, what is a selling climax? The pattern which I'm going to show you, this is your selling climax. A selling climax should be a wide spread bar. That's the first rule. Second rule is it has to have a ultra high volume or volume more than average. I would prefer ultra high volume because if you are having an ultra high volume in the market, it means that there is smart money's presence. Second thing. Third thing, the closing of selling climax should be on the lower half of the bar. So what is that? So if this is the high of the bar, and if this is a low of the bar, and if this is a 50% of the bar, the closing should be on the lower half of the bar. That's what selling climax is all about. Okay. So previously I also made a stopping volume video on YouTube channel also. So if you compare that stopping volume and selling climax, it's just opposite. Stopping volume, the closing will be on the upper half, that is the 50%, above the 50%, and in the selling climax it will be on the lower half. That's the only difference right here. The volume is similar for both stopping volume and selling climax also. It has to be ultra high volume or more than average. Okay, if it is ultra high volume, then it's a stronger one. Okay, so now this is one of the examples. I hope you understood. But right now the main question, why selling climax even occurs in the market? First thing you have to understand, it is a signal of strength. What is a signal of strength? Whenever there is a strength in the market, it means buyers are entering in the market, right? So it's a downtrend right here. Market is continuously going on a downtrend right here, and suddenly there is a huge volume on a particular down bar. Or let's say if you're a price action trader, you might see a huge volume in a candlestick. If you see that, a lot of price action traders think that, oh, there's a huge volume right here. Now all the someone huge sellers out there, they have entered the market. Let me just go for a sell trade right there. That's the initial novice traders mistake that happens right here. If there is a huge volume with a down bar, it doesn't mean that it's sellers, fresh sellers who are entering in the market, not initiative sellers who are entering in the market. It is the buyers who are entering the market, because smart money uses limit orders right here. They don't use market orders, right? So if there is a huge volume right here, it means that they have already kept their limit orders right these levels. That's why there is a huge volume right here. So the buy orders are getting triggered right here, right? So based on this, we have to understand that, okay, right now the smart money is trying to enter in the markets, but we have to wait for the decision. Now the typical, if you compare buying climax and selling climax, okay, so if you don't know what is buying climax or stopping volume or anything like that, I will give you, it will be on the top left corner of the YouTube video. I'll give you both buying climax and stopping volume videos link also. Don't worry about it. It will be on the description also. Now if you look at the buying climax video, if I explained, it's the just dead opposite of the selling climax. Okay, it's just vice versa. Buying climax, it's a signal of weakness, and selling climax is a signal of strength. Okay, first thing. Second thing, I have already explained how to trade buying climax, right? So based on books or based on my experience, I have traded buying climax. I got really good results. But it is not how you have to trade selling climax also. You have to import, this is very important, you have to understand. For buying climax, what happens is that if there is a, let's assume if there is a upper bar, okay, followed by a ultra high volume, or let's say, let's just go for this one. I think we can go for blue one. If it is a upper bar followed by a, let's assume, ultra high volume, and the next bar has to be a down bar. Okay, the next bar has to be a down bar to take the trades in buying climax. You take a trade, you keep your stop loss right here, you keep your first target right here. This is how you trade buying climax. But that's not how you trade the selling climax. You have to be very important right here. We're very careful. Even if there is an upper bar for the selling climax, this is a confirmation bar, you should not trade selling climax like that. I always recommend even my students or anyone out there to trade above the selling climax. That would be the proper approach. Look at this. Selling climax, market reacted to these levels, market went down. You could have taken a trade. Okay, if you had a confirmation of a par, you could have taken a trade. Your stop loss has to be below these levels no matter what. If you have taken a trade around these levels based on no supply or anything like that, it with different time frames, let's assume it could be 1 hour time frames or 15-minute time frame, you could have taken the trade. But unfortunately, that's not how I recommend you to take a trade. Wait for the market to go above these levels, then wait for the retracement also, or else you can take the trades on the high of these levels. This is how you have to trade selling climax. Let's look at the examples also right here. Okay, now same example, I just draw the high of this particular selling climax, and look what happened. Market went up, broke, and again market started holding the levels, then market went up. This is how smart money works. Okay, this is how the buy orders work. This entire phase, okay, this entire phase right here, this is a decision phase. If there are sellers out there, market will go down from these levels. If there are buyers, market will go up. But this phase is an absorption phase right here. Market starts absorbing more and more orders. If you don't know what is absorption phase, cause versus effect. If you don't know, just go to the basic series of volume spread analysis in my YouTube channel. You can see cause versus effect. I've explained how cause works in the market. If you want more explanation, you can definitely join the one-on-one session so that I can explain you in a very easier way. Okay. Now, wait for the market to go up, retracement, market started holding these levels, and according to me, there is actually demand is actually increasing right here and supply is decreasing. So based on that, I would have taken a trade right here. Personally, I didn't take this one trade. There is one more opportunity. There's one more example which I had taken the trade. I'll show you that right now. Okay. Now, okay, this is Larsen and Toubro chart of 30-minute time frame. I love this company. Okay, I have invested in this company. It's been a very long time. So Larsen and Toubro. Now there is two examples right here. That is, this is also considered as sterling climax. You can almost consider it. Okay, because why? First thing, you have to understand this. This is a down bar, the closing on the lower of the bar, and the same time the market is already on a downtrend and it has a ultra high volume. Okay, so you got a confirmation right here. This is a selling climax. As a good VSA traders, okay, as my students, as my subscribers, you would wait for the opportunity to go up right here. Okay, so you would have waited for an opportunity, you would have gone up right here. The second thing, again you got a signal of strength. You got two signals right here to gain more confidence right here. Look what happened. Again signal of weakness followed by upper bar. Just like buying climax, vice versa. You could have taken an intraday trade right here. You could have gained your profit, but the stop loss would have been used right here. That's why I wouldn't recommend any one of you to trade just like buying climax and vice versa. Always wait for the market to go above the selling climax. Wait for the market, let it go, and look for opportunities above. It doesn't matter if it's a retracement. If you didn't get a retracement, it's absolutely fine. You might get a trend line breakout right here. You might be a price action trader. Combine it. Look for different types of entries. At the end of the day, understand the market right here. Who is entering right here above the selling climax? It is buyers. You know that market will go up right here. So based on that, you can take an entry right here, here, or here, anywhere right here. That completely depends upon you. I'm not talking about even entries. Understand the market right here. What's happening? Selling climax, market went up, completely shift you have to shift your mind right here. Okay, market is on a buying phase right now. Even if it is a buying phase, even if it's your stop loss at the maximum stop loss has to be here no matter what. Okay, you can find this like hundreds of examples. Go for it. Go nifty 50. If you're a like the American trader, just go through Apple stocks or anything like that, Amazon, Apple, Tesla. You can go for it. In every single market in the world, this particular pattern occurs. Okay, so right now this is one of the examples. Signal of weakness 1, signal of weakness 2. It got you more confirmation. The more strength in the markets, it is good for you to take a trade. After that, market went up. Now there is one more, the final example. This is my favorite one because personally I had taken this trade. So that's why I taken Hero MotoCo trade based on Elliott waves and volume spread analysis. This was an over of impulse wave. Okay, so there was an impulse wave. I was waiting for a particular buy trade right here for a swing trading. It's been a while actually. So I was waiting for a buy trade. So based on that, I was looking for opportunity, and suddenly in 30 minutes, I got a selling climax. So I was waiting for an opportunity. So this is a selling climax. Okay, wide spread bar followed by closing on the lower side and ultra high volume. You can consider, definitely you can consider this. Why you can consider this? Because it is ultra high volume. It is a higher volume than the previous bar. Obviously, you can consider this as a ultra high volume. First thing, look what happened later. Market went up and tried to break the levels, then it came down. Okay, so I was waiting in the market. I was waiting for it. I was waiting for the structure, but I kept my limit order right here. Okay, 50% of my orders were, I kept a limit order for 50%. Let's assume that I wanted to buy 100 quantities of Hero MotoCo. Okay, I didn't buy 100 quantities, obviously. I don't. So right here, what happened is market had a breakout. So why I'm writing this called jump across the creek right here? Simple. This is Jack means jump across the creek. It is a concept of Wyckoff schematics. One of the subscribers also suggested me to make a series for Wyckoff schematics. I'm definitely preparing for it. Once I'm done with it, I'm definitely going to upload more and more videos on Wyckoff schematics also. Don't worry about it. This is one of the concept of jump across the creek. Once we had a breakout of the selling climax, my 50% was also triggered. But unfortunately, I didn't enter with my another 50% here, but instead I entered around these levels. Okay, this was my actual trade actually. So based on that, I had a good opportunity and I gained around 300 points in this one particular stock. So this was a good one actually, like literally around like 15 days or something. So yeah, I think around, yeah, it is around 17 days. I holded this stock, and later on, once I had a confirmation, see, you can see the signal of weakness right here, upper bar with a high volume. So based on this, I was like, okay, fine, this is the right time to exit the trade. So based on that, I exited the trade. I was waiting for one more opportunity, but yet market started going up after a while also, but I didn't take the trade. I exited this. I gained around like 300 points or something. Then I was like happy, like, okay, fine, I gained money. I don't want to risk more just because market is going up. Okay, so that's how I taken this trade. I hope you understood how I have taken the trade and how I explained you in the form of how to take trades in the in selling climax, and at least you got an idea about it. If you want me to make more videos regarding selling climax or anything like that, definitely can comment in the comment section so that I can make one more video or anything like that. Definitely volume spread analysis is actually coming to an end. Actually, the entire series, the continuation series of volume spread analysis is coming to an end. There is only one or two topics of volume spread analysis is pending. After that, I'll be starting the Elliott wave series, just like this, from the day one, from the basics to the selling climax or whatever I teach you. Just like that, I'll be making a separate videos for Elliott waves also. After that, I'll be making a series of option selling. Once it is done, I'll be start doing the post market analysis of Nifty, Bank Nifty, cryptocurrencies, forex markets, or anything like that. I'll be making more and more videos eventually, so that you guys can get as much as knowledge as possible, without wasting your money on anything. Okay, So that is my vision for this one particular channel and this one particular community. And that's it from my side. Thank you so much. And please subscribe as much as possible, because if you're subscribing, it motivates me to make more videos for you guys. If you want videos on your regional languages such as Hindi, it could be Kannada, Tamil, Telugu, it could be any languages, definitely I can make it. But I need more subscribers. So if it's more subscribers, definitely I can, it motivates me to make more videos. And that's the one thing I expect from each and every one of you. And thank you so much. We'll see you in the next videos. Goodbye.